Have you caught the recent wave of Bitcoin's price fluctuation? It's been quite the ride. Let's take a moment to dissect what's happening on the crypto stage. Recently, we've seen Bitcoin's price surge above $50,000. This massive wave wasn't just a random spike, but a result of exchange-traded fund inflows. Yes, you heard it right. ETFs are playing a massive role in the crypto world. But as with any roller coaster ride, what goes up must come down. There's a potential 10% correction looming on the horizon, as indicated by the TD sequential indicator. For those who might not be familiar with this term, the TD sequential indicator is a technical analysis tool used to identify possible price reversals. So what does this mean for Bitcoin? Well, this correction could potentially reduce Bitcoin's market cap by $138 billion, bringing its price down to around $45,000. Now, I can almost hear the gasps. A drop from $50,000 to $45,000 can seem like a big deal. And it is, especially when you consider the sheer volume of money involved. But before we allow panic to set in, let's put things into perspective. Bitcoin is no stranger to dips and dives. It's seen bigger drops before and has always managed to bounce back, proving its resilience time and again. So, yes, we might be approaching a dip, but it's important to remember that this is nothing new. It's just another twist and turn in the thrilling ride that is Bitcoin. And who knows? This could be an opportunity in disguise for those who've been waiting for the right moment to jump in. So buckle up, hold tight, and enjoy the ride. But before you panic, remember, Bitcoin has seen bigger dips before and has always bounced back. This is just another bump in the road. Despite this potential downturn, it's not all doom and gloom for Bitcoin. Now, you might be wondering, with the potential for a 10% correction looming over Bitcoin, signaled by the TD sequential indicator, how can we possibly remain optimistic? Well, let me tell you, the world of cryptocurrency is not as black and white as it might seem. Yes, the possibility of a price drop is there, possibly reducing Bitcoin's market cap by around $138 billion and bringing its price down to around $45,000. But remember, in the world of trading, every fall is potentially a setup for a bigger rise. Despite these recent declines, technical indicators remain positive. That's right, the same indicators that are suggesting a possible correction are also showing us a different side of the story. The moving averages, for instance, are signaling a strong buy. For those of you new to the crypto game, let's break down what this means. Moving averages are used to analyze the direction of a trend by smoothing out price fluctuations. It's a way to get a clearer picture of the market's performance over a period of time. When moving averages signal a strong buy, it suggests that despite short-term fluctuations, the long-term trend for Bitcoin remains upward. So what does this mean for you, the Bitcoin enthusiast? It's simple. While the short-term outlook might seem a little gloomy, the long-term perspective is still very much optimistic. And let's not forget, Bitcoin has been here before. It's weathered storms bigger than this and come out on top. It's shown us time and again that it's capable of bouncing back stronger. So, even though we might be seeing red now, the market seems to believe there are still plenty of reasons to buy Bitcoin. Interestingly, there seems to be a notable absence of FOMO, or fear of missing out, in the current market. Now, for those new to the term, FOMO is a phenomenon that happens when people jump on the bandwagon because they see everyone else doing it, and they don't want to miss out on potential gains. It's often fueled by a mix of greed and social pressure, and it can drive rapid price increases in the world of crypto. But here's the crux of the matter. The lack of FOMO in today's Bitcoin market might just be a good thing. You see, when the market is driven by fear and greed, it tends to be volatile and unpredictable. Prices can skyrocket one day and plummet the next, and that's not exactly a recipe for sustainable growth. Now let's imagine a market without FOMO. Without the greed-driven rush to buy, the market dynamics could change significantly. Prices might not spike as dramatically, but they also might not crash as hard. In other words, the absence of FOMO could potentially lead to a more balanced and stable market. And that's exactly what we're seeing with Bitcoin right now. Despite the recent surge in price and the looming threat of a correction, the market seems to be showing a level of maturity. Investors seem to be taking a more measured approach, not rushing in out of fear of missing out, but rather making calculated decisions based on market indicators and trends. This could be a sign that Bitcoin is moving away from the boom and bust cycles of the past and towards a more sustainable path of growth. And while this might not be as exciting as the wild price swings we've seen in the past, it could be much better for the long-term health of the crypto market. So, while we may not see skyrocketing prices fueled by FOMO, this could also mean a more stable, sustainable growth for Bitcoin. So, what does all this mean for the future of Bitcoin? Well, there's an interesting divergence of opinions here. Some believe Bitcoin will follow the TD sequential indicator's lead and experience a significant downturn. This could potentially see Bitcoin's price drop to around $45,000, reducing its market cap by a whopping $138 billion. This is a substantial adjustment, but it's not unheard of in the wild rollercoaster ride that is the cryptocurrency market. On the flip side, others believe that Bitcoin could defy these expectations and reach new highs. The technical indicators remain positive, with moving averages signaling a strong buy. This could indicate that despite the potential correction, the long-term outlook for Bitcoin remains bullish. But as always, it's crucial to remember that cryptocurrency investing is not a guaranteed path to wealth. It's a volatile, high-risk market that requires careful research, strategic planning, and an understanding of the technology behind it. So whether you're a seasoned crypto enthusiast or a newcomer to the digital currency world, it's essential to do your own research and make informed decisions. Don't let the fear of potential downturns deter you from exploring the exciting world of Bitcoin. Instead, see them as opportunities to learn more, to improve your understanding, and to refine your investment strategies. Remember, every downturn is followed by an upturn, and every storm brings with it the promise of clearer skies. In the end, the future of Bitcoin, like any investment, is not set in stone. It's shaped by a myriad of factors, including market trends, investor sentiment, technological advancements, and global economic conditions. But one thing is clear: Bitcoin has proven its resilience time and again. It's weathered numerous storms and emerged stronger, underlining its potential as a revolutionary financial instrument. No matter what happens, one thing is clear: Bitcoin isn't going anywhere. It's weathered storms before, and it will weather this one too. So keep your seatbelts fastened, crypto enthusiasts. The ride isn't over yet.